Good morning, ladies and gentlemen, and welcome to the Good Energy Group PLC Pre-AGM investor presentation and Q&A. Throughout this recorded presentation, investors will be in listen-only mode. Questions are encouraged and can be submitted at any time via the Q&A tab that's just situated on the right-hand corner of your screen. Please just simply type in your questions and press send. The company may not be in a position to answer every question it receives during the meeting itself. However, the company will review all of the questions submitted today and publish responses where it's appropriate to do so. These will be available via your Investor Meet Company dashboard, and we will notify you by email when these are ready for your review. Before we begin, I would like to submit the following poll, and if you could give that your kind attention, I'm sure the company would be most grateful. And I'll now like to hand you over to CEO Nigel Pocklington and CFO Rupert Sanderson. Good morning.
Good morning. Thank you, Mark. Well, a very warm welcome to our pre-AGM update. Just as a reminder, the reason we are doing this call is that the annual general meeting itself remains an in-person meeting. It is not a meeting that is entirely convenient for all shareholders to attend, and therefore we have scheduled this call about a week in advance to both reiterate some of the points about our strategy that we've been making, to give shareholders a bit of an update of how we are seeing the market and our progress within it, and to give shareholders an opportunity to ask questions of Rupert and myself before the general meeting itself. So if we go to the next slide, just to give you a sense for that, that therefore means, perhaps mercifully for many people on the call, this will be a relatively short update in terms of its content. And so after a few thoughts from me, I'm going to hand over to Rupert just in terms of how we are seeing the market and our trading within it. I'll then remind everybody about our strategy and how we are progressing, and we will leave time for both pre-submitted and questions that come up during the meeting. Thank you. So by way of an overview, I think it's probably worth my saying that I took over as CEO a year ago, and during that time, a company whose mission was supposedly focused entirely on dealing with the climate crisis has obviously found itself in the midst of another crisis, which is the crisis caused by spiralling energy prices. We are clearly not blind to the significant economic and social costs that those prices begin. I would wish all shareholders to know that we are doing everything we can as a team on a number of fronts. Firstly, to ensure that the company continues to trade robustly and stably, which means that we will not be one of the companies adding to consumers' costs as a failed supplier. And secondly, we continue to work very closely with a range of government departments and the regulator to ensure that both our operations are passing muster, but also that we are contributing to ideas about how the industry can reform itself to improve for consumers and how we can get away through this crisis. But I'm not blind at all to the significant impact of the level of energy costs that we are seeing. Despite that, we are, we think, operating robustly and stably and are committed to remain doing so. And we are both trading as well as possible, I think, in this environment, and also committed to pursuing and pushing ahead with our strategy. So on terms of trading and financials, I'm going to hand over to Rupert to give us a sense for how we're seeing things. Then I'll take over on other matters.
Thank you, Nigel. So just a brief update, really, in terms of sort of financial summary, really looking at the year-to-date performance in 2022. As Nigel said, the energy markets have remained volatile. There's been continued impact, particularly around commodity markets from the Russia-Ukraine situation. And that is now flowing a little bit further towards the United States, where power and gas prices are rising to levels that they haven't seen for a substantial period of time. The company, so Good Energy, has navigated that continued high price and volatility well in the year to date. And so that's encouraging for us as we've been operating over a further number of months of this energy crisis. Domestic price rises for the SVT base which are effective, the first one in February 2022, and a second one which will be effective at the start of July, so in a couple of weeks' time. And a second small and medium-sized business SVT rise, which is currently in progress, are keeping pace effectively with the continued rise in the cost of commodities, and also keeping pace with the level of risk that we are effectively seeing from scenarios such as low wind, which we talked about quite a lot at the back end of 2021. So we are comfortable with the way that the pricing and commodity cost inputs are currently working together. Our cash position remains strong, so our cash and cash equivalents are around about £20 million at the end of May, and that's a very similar position to when we gave our update at the preliminary results in March. And at this stage, management expectations for the full year of 2022 are unchanged. And obviously we have sort of 7 months of the year to trade, so we'll continue to manage against that outlook. Then I just wanted to talk about cash collections. This has obviously been one of our strongest focuses over the course of the last 9 months. And the graph, I think, shows here the step change that we have seen in collections from the sort of back end of the summer 2021 through to now. That, in the most part, is driven by price increases and the flow of those into direct debits and other bill receipts. But it is also testament to the continued close operational focus that we have on this clearly very important area of our business operation. And it's helped to effectively limit the working capital impact of the very high commodity costs over the second half of this winter period. Looking forward, obviously prices are continuing to increase, and from a financial perspective, and a sort of Nigel's outlined the sort of social and economic cost to households and business. But from a financial perspective within our organisation, we obviously will be continuing to look very closely at the cash collection and debt aging outlook in terms of the various segments of our customer base, because we do not expect to be immune by any stretch from the impact that this continuing increase in commodity prices is going to have on households and some businesses' ability to pay as we head into a further winter period. So that, I think, is a very brief update in terms of financial performance, and I will hand back to Nigel.
Thank you, Rupert. So if we click on one more, we outlined our future strategy at our preliminary results presentation in late March. I'm going to just remind everybody of what the direction the company is heading in and make some remarks about how we are progressing. And the important place to start, I think, is the company's sense of mission and vision. And actually, the overall mission that we have, which is powering a cleaner and greener world, is unchanged. It is the mission which Juliet Davenport began Good Energy with over 20 years ago. What I think is changing as the energy markets change and people's use of energy changes is the way in which we are intending to fulfill that. And we announced in March that our ambition is to support 1 million homes and businesses cutting carbon either from their energy or their transport use by 2025. And the key point about that, I think, is that we are not just an energy supply business. Absolutely, we are committed to supplying 100% renewable power to people who wish to consume it. But we see the services we offer either to people who are generating their own power, eventually to people who want to store their own power or heat with clean power, or people who want to use power for their transport as being equally important in both developing our mission, but also developing our business. So if we click onto the next slide, that's sort of easy to say, and maybe visualizing this is where we need to go. And so we have obviously a representation of something about home of the future here, but just to underline the point, we have a view that we've got three elements to our proposition. The first is that we sell genuinely renewable power, so not certificate-backed power, that it is fairly priced, and it is very much aimed with very high ethical standards at committed consumers in both domestic and business settings. We are also major players in the world of self-generation. So we are already administering around 20%, we think, of the feed-in tariff market, for example. And there is significant opportunity for us to grow our services for that market, not just in terms of newer ways to think about generating your own power, but in terms of storage and sharing down the line. And in transport, you will all be aware, I think, that electric vehicles are now very much the fastest growing category of car ownership. The expected growth in electric vehicles on the road is something of the order of 50% compound annual growth rate over the next 5 years. And we are already major players through our investment in ZapMap in making it, frankly, easier to own, power, drive and pay for own one of those vehicles and pay for your charging. And so, taken all together, we are helping people take greater control of their energy usage and their carbon footprint, and certainly in terms of motoring, cutting their costs. And then another way of looking at that is maybe from a more industrial point of view, and I would want to emphasise to shareholders that it's a very interesting and dynamic marketplace that we're now working in, whereas for a long while the energy market was quite stable, and whilst a lot of elements within this environment are changing. So as you will know, the UK has already made quite significant moves towards increasing amounts of renewable generation, and a recent government energy strategy announcement focused entirely almost on how generation was going to adapt. We should expect significant reforms, particularly in the transmission and distribution areas down the line, which will begin to hopefully allow us to better pass on the cheaper cost of renewable generation when it's fully operational, and move away from a system that worked in a way sort of 15 to 20 years ago, but is no longer perhaps fit for purpose. And there is an awful lot of innovation going on behind the meter, some of it, but within the home, as we expect more and more households to be using electricity, not just for light, but also for heating, for motoring, to be able to generate their own and store their own. And the technology that balances and puts people in control of that, often enabled by smart metering, is becoming an increasing area of investment for a lot of companies, and it is an area which we think we can play a role in, both in terms of our reach to early adopter customers, and because either ourselves or through partnerships, we are already playing in several of those areas. And so a bit of an update just on each of those three elements of our business. I think the first point to point out or reassure on is, despite the fact that we sold our own generating assets at the start of this year, which, to remind shareholders, were only generating about 15%, a minority of our power needs, we remain committed to our 100% renewable supply proposition. It is largely fulfilled through our network of independent generators. There are over 1,900 generators across the country. The map gives you a sense for location and number. And so as you can see, it is right the way from the north of Scotland to the southwestern tip of England. If you study that a bit more closely at times, you will figure out the sort of truism that it is often windier in Scotland and sunnier in the south of England. But this community of generators, who we are a major provider to, they're not going to be able to sell their power to the bigger players, enables us to back our proposition with 100% renewable power. It is a proposition which is very heavily supported by a lot of regulators and other regulatory bodies. So you can see some of the very recent credentials we have for this at the bottom of the slide. It is a a proposition which is underpinned also by high levels of customer service enabled by our investments in technology. So we have a Trustpilot rating of 4.5, rising actually to 4.6 in recent weeks, which makes us one of the best rated energy suppliers in the market. And our ambition for this business, certainly this year, is to retain our domestic base, to make sure we are focusing on bringing in very purpose-driven business customers who want to buy into our proposition and with whom we can often net off their larger usage of power with new PPAs. We are continuing to sort of retain and invest in our base of long-term agreements with these generators to underpin this proposition. And we see this as a business that over the course of a roughly 12-month cycle is a sustainable place for us to be. It is certainly one where we think we can generate profit and cash, as well as fulfill our customers' needs and our commitment to renewable supply. So that's the supply side of our business. We then are, as I said, major players. We're not the biggest supply company by any means, but we are quite significant in the world of self-generation. That comes initially from our heritage, so we were one of the initial moves behind these schemes, and we remain a major administrator of the feed-in tariff scheme. That scheme itself is actually closed, and whilst it will run on for a number of years, this is now an area of significant investment for us. We're investing to improve our products and service to self-generators, be they fit customers or newer smart generation customers. And by the end of this year, we're looking to have new products and services in the marketplace, which begin to enable people, for example, to earn more closely aligned with what they are generating and to enable a new group of customers to do business with Good Energy through the Smart Export Scheme. And I do see this as an area for us to both see significant growth as the market grows over the next few years, and for us to gain some market share, because this is an area of focus and innovation for us as opposed to some of the bigger players. And as you might expect, a lot of data is now pointing to resurgent consumer interest in rooftop solar and storage increasingly, partly prompted by the very high level of energy prices. And then lastly, we think we are invested in a very fast growth market in terms of our focus on clean transportation. That investment is predominantly, not entirely, but predominantly through our majority stake in ZapMap. A couple of pointers about ZapMap, which we shared in the results, and we haven't released any new information, but it retains its ability to maintain a very high share of the battery electric vehicle park. We have roughly a 70% penetration of those drivers without any significant spend on marketing. So it is by far the leading app for planning and payment within the market, and it grows as that market grows. It has a significant base of monthly active users, and it has begun to show that it can scale a business, both in terms of a paying subscriber option, which is converting at 2% of the base, but a higher percentage amongst newer customers who are maybe newer to electric vehicle ownership. And it is signing up charge point operators for a Zap Pay proposition, as well as building a revenue stream to actually charge players within the EV market for the data that it generates. So we see this as investing for very significant growth. And to fulfill that, as we said in March, we have launched a Series A fundraise, which Good Energy is going to remain a significant investor within, but we are looking for other investors to join us in that. We said at the time that our ambition was to close that round within the second quarter of the year, and we are pretty much on that target with a good level of interest from some very interesting investors. And when we have more news to share, we will share that, but that remains on track. And then finally, I just wanted to conclude with a couple of slides on board and AGM and governance matters. And the first place to go with this is to really mark the fact that Juliette Davenport, my predecessor and the company's founder and CEO for about 20 years, announced a few weeks back that she didn't intend to seek re-election at the next AGM. That is a part of a planned transition. Juliette has been a fantastic support to me coming in as CEO, which were pretty intimidating shoes to fill, frankly, but I'm very grateful to her personally for her support over the last year. But it was always her intention to build a portfolio career within the energy industry and wider. And as you might expect, given her experience and profile, she has not been short of offers, and Juliet has decided to stand down so that she can focus on her burgeoning career in other commercial and regulatory and government areas. So we wish her well, and I would want to put on record my thanks on behalf of the board and the wider team for everything Juliet did during her extraordinary tenure with Good Energy. So there's something about a historic moment there, I think, for Good Energy, but Juliet will be standing down from the board at the upcoming AGM. On the subject of which, just to conclude, it is obviously an important moment in any company's calendar. It's where we are looking to the people who actually own the business to give us their views on a variety of matters, and it is very much the board's view that we recommend shareholders vote in favour of all of the resolutions in front of the AGM. They are pretty much market standard resolutions around reports and accounts, election of directors, and ability to raise funds, which most public companies would see approved, and we very much recommend and are seeking support from our shareholders in those resolutions. And that concludes the formal presentation. So,
Nigel, Rupert, thank you very much indeed for your presentation this morning. Ladies and gentlemen, please do continue to submit your questions just by using the Q&A tab that's situated on the top right-hand corner of your screen. But just while Nigel and Rupert take a few moments to review those questions submitted already, I would like to remind you that a recording of this presentation, along with a copy of the slides and the published Q&A, can be accessed via your investor dashboard. Rupert, Nigel, as you can see, we have received a number of pre-submitted questions that were submitted by investors ahead of today's event, as well as a number of questions that were submitted during the presentation today. Firstly, thank you to all the investors for submitting their questions. And Nigel, Rupert, if I could please just hand back to you to run through that Q&A tab, and where appropriate to do so, if you could please just read out the questions and give your response, and then I'll pick up from you at the end. Thank you.
Sure. And we might as well take the questions in order as much as we can. So Peter asks what the cause of the spike in collections was in the month of March. And Rupert, your team was close to this.
So March is probably, I mean, it was the same thing happened in March 21. There's probably two drivers for it. It is one of the sort of peak months in terms of usage, people who've been using power and gas in January and February, and the collections for those months will happen then. It's also, there are some customers who, some in the business sector, who pay on a quarterly basis as well, and so there is a catch up there as well. It is a relatively significant spike. It may not happen every year, but I think March will always be the highest month of a year, given anything else that's unusual. So we see a slight seasonality as well. We do see higher collections in general through the sort of December to April period, slightly lower in the summer. Although, as the majority of our customers are on direct debit, it isn't as extreme as some of the consumption levels, particularly on things like gas, where winter and summer consumption is obviously very, very skewed.
Great, thank you, Rupert. So let's go to Jake's question next, which is, how do we know we're not putting up prices because you can? So Jake, let me talk about pricing and what we're doing here. I mean, it is correct to say that we have seen a number of price increases since last autumn, and it is also correct to say that our SVT has a derogation from the Ofgem driven price cap. I think there are three things. We obviously aren't doing that. Our pricing decisions are made entirely because of the state of the forward energy market. So we know how much power we've got to buy, for how long, and we know that we can see a price for bringing that in, and our prices adjust accordingly. And what's driven them up is the rising price of electricity overall. Just as a reminder, it's set by the system rather than purely by our renewables. And we've seen some additional shocks to that in anaerobic digestion recently, which is generation from agricultural byproducts, where the war in Ukraine is driving up fertilizer costs and therefore seeing some organic material, frankly, used as fertilizer, and fewer waste crops as feedstocks, and we've had to feed that into our pricing. There are still controls over what we're doing here. Ofgem do audit all of our governance around this, and we are required to submit to them regular updates as to what we're doing. They have actually even gone as far as auditing all of our direct debit files, as they have to do with every energy supplier, and I'm not anticipating any questions from them on those. So there's an Ofgem oversight of this, and there is a board oversight of this as well. We provide detailed justification for the pricing decisions we are making, and as soon as we are able to reduce those prices sensibly, we will do so. What those pricing decisions are aimed really at doing is making sure that we continue to run a sustainable, resilient business, not a super profitable business necessarily, but a sustainable, resilient business, which to my mind and to the mind of the board does mean that we are capable of showing a profit on an annual basis. And I would probably conclude by unfortunately reminding everybody that every bill payer in the UK is saddled with costs from failed suppliers who are not able to do so. And in fact, the taxpayers of the UK are also saddled with costs in the shape of bulb for a failure to do so. So this pricing activity is all part of making sure we're running a resilient business. Right. Manor asks what we are doing to support fuel poor customers. So I think two things there. The first is that belatedly, in my opinion, and if those of you who do follow the company in the press will see that we've been pretty strident about this, there is some better support coming down the line for people in fuel poverty, and in fact for every consumer. And so the first bit of support will be to accurately and clearly pass on the support, things like the £400 rebate that's coming in down the line to consumers, and make sure we're sort of playing our part in that side of things. The second is that we encourage our consumers to contact us if there's any questions around indebtedness or difficulty to pay, and we can explore ways of smoothing out that consumption. We are clearly not blind to the social impact of power prices at this level, and continue to do what we can to support our customers, and also work with government and other agencies to bring in much needed support for them. So the next question: when will Good Energy pay customers under the SEG, Smart Export Guarantee Scheme for energy provided to the grid? So I had a slide on that. We have focused most of our self-generation efforts up to this point on the feed-in tariff scheme, which we were major instigators of, but is now a closed scheme, and have had to sort of do a bit of catch-up development, but also a chance to maybe make a better and improved product aspect for the newer scheme, which is Smart Export. And as I said, we're anticipating being able to offer something by the end of this year. Right. So that was Nick then asks how we earn revenue from ZapMap. So as a reminder, we're investors, we're currently majority investors, so we're consolidating our profit and loss in the accounts from ZapMap. ZapMap earns revenue in three ways. One, it charges for a subscription. It's a freemium product, so the basic use of the map is free, which is a good way to help them keep their market penetration high. But if, for example, you want to install it within Google or Apple CarPlay products, you need to pay a monthly subscription. So it has a subscription line. That is obviously a very attractive business model if you can get it rolling, because it's very sort of clear, reliable cash flows. It has a payment product called Zap Pay, which means you don't need to reach for credit cards or, more likely, keys or memberships or apps for individual charge point operators. That is a pay-per-charge model. So they're charging the charge point operator roughly 10p a charge with a bit of additional top-up on that. So that's revenue for that. And on the data side, it is an emerging business, but it will be rather familiar to me from my days in the world of price comparison, where we would have a data product faxed to the car insurers, for example, and it's an aggregated set of data that does a good job of showing how people are using their electric vehicles, which players in that marketplace can subscribe to. So we've got subscription for data, subscription for customer products, and paid for charging, which is beginning to grow, obviously from a very low base at a pretty rapid rate. And that's that plus the market penetration and the international prospects for ZapMap is the reason we see it as a fast growth business, I suppose, along with the fact that it's aligned to the growth in the electric vehicle market. So next question, are we seeing more opportunities in the market now there are fewer suppliers to compete with? So I'll bring you Rupert just to sort of give me a break from talking.
Yeah. So the market is, yes. So I mean, we have a market now that has got less than 40% of the suppliers that it did 12 months ago. I think whether it is larger or smaller suppliers, the last 6 months has seen an extreme level of caution. There has been very little churn of any customers within the industry, principally because those that are subject to the price cap have found that that price cap has been lagging the price of wholesale electricity and gas. So it would have been a very loss-making activity to take on those customers over that last winter period. I think we're now seeing a sort of slightly more stable position. There are a couple of suppliers that are sort of starting to perhaps look at trying to grow again. And as Nigel said, I think that we are focusing on retaining the customers that we have through this continued volatility. But we do expect that there'll be opportunities to acquire again, to grow at a sustainable rate in both the domestic supply focused around our derogated SVT product and in the business sector, again, targeting some of the customer segments, customer types, and ways of supporting both our PPA generators and business suppliers with products that link across those two different segments. So we'll maintain a sort of steady and sort of cautious outlook in the short term, but I do expect that we will see future opportunities back into that supply segment in the not too distant future.
Thank you, Rupert. So next question we have is from Matthew, which is what are our goals for the next year? So we can be pretty succinct about this, actually. The first goal we have is that we do want to show that we can be a sustainably profitable business. So we are looking to produce some profit in 2022. We're also looking to make inroads in the strategy and the aim I talked about around moving towards the 1 million customers we are helping reduce carbon with. In practical terms, that means we're looking to improve and launch services for the decentralized generation segment, so to take some market share and to launch a smart export program for those customers, and to see ZapMap's funding completed and further acceleration in the growth of ZapMap. And I think in the environment we're operating in, achieving those three goals will mean that 2022 has been a strong year for Good Energy. Next question, what does Good Energy propose in order to de-link the renewable electricity prices from the price of the most expensive fossil fuels? So I'll have a go at this. This could become a half-hour microeconomic seminar very quickly. So as a reminder, we can propose things, but actually the operation of the market is in the hands of Ofgem and the business department. It's actually been quite a recent development whereby the sort of rule-setting part of the grid has actually been brought back under state government control in the UK, partly to enable changes. We would say that what is not working about the current market, that it is a marginal cost-based electricity grid where the cost is set along the marginal cost of the last generator to come on stream. And as we've all seen through the winter, that last generator has entirely been gas or coal, so an expensive and obviously very expensive from an environmental point of view source of power. And actually what we would like to see is a move away from that marginal cost basis to either a more locally driven grid, which means people living near significant renewable assets can benefit from that, or to something more aligned to an averaging type system, which means that it does a better job of passing on the low marginal or low to negligible marginal costs of renewable generation when they are available. But I do think that significant reform of the generation market is an important element towards achieving a better outcome for consumers. Rupert, I know you watch these markets quite closely. I don't know if there's anything you'd add to that.
I don't think so. It is one of the things that was there was an article in it in the Times a few days ago, and it is something which I think will continue to gain traction as the UK builds out further renewables. There are obviously other parties who will have different interests given their own respective investments, but I think it is going to become one of the most important ways in which the country can recognise effectively the input cost of sun and wind is not one that has to be paid for again and again.
Great, thank you. It will be a debate, I'm sure, that runs for some years, but it's important as a country that we get right. So Miguel is asking around this ZapMap Series A and my statement that it was on target, but obviously he correctly refers to the fact that technology markets in particular have taken a battering on both sides of the Atlantic over the course of the last 4 to 5 months, and ZapMap is very much a technology-enabled platform. What I would say is, we are obviously quite a long way down the line in terms of that fundraising, so I'm a bit limited to what I can comment on. What I think we've seen is increased sort of corporate interest in ZapMap as opposed to necessarily pure play tech funds, although we have talked in both areas, and certainly the evidence has been that whilst, yes, you can clearly see that there is a different investment appetite for tech than there was, say, 6 to 9 months ago, the scale of electric vehicle growth, the impact of that on a whole variety of industries, and ZapMap's market position has meant that we are having very engaged conversations, and as soon as we have more to share on that, we will do so. Next question. More on Zap's future plans. Well, I think we've touched on this during the conversation, but it's fundamentally, the Series A enables a significant scaling for ZapMap, which means bringing in more particularly technology talent so that we can kind of continue to drive product improvements. So that's around subscriptions and the payment side, continue to bring in charge points for Zap Pay as a product, and begin to explore which other markets ZapMap as a product may work in. And those are the short-term goals and the aspirations in the business plan. Reinhard, another question. What assurance can you provide to customers that smart meters will not be used in the future to charge differential prices for energy according to the time of day? That's an interesting question to answer. So there are no concrete plans to do that at the moment. However, it may well become the case that differential pricing by day is actually a product that a lot of consumers will want to engage in, and it also is a way of optimizing the electricity grid that may make considerable sense both for individuals and for us as a country in terms of reducing our carbon footprint. So I think incentives to use power at sort of high availability, low usage points is a very sensible route for the UK to go, and if there's a point in which we can participate in that, we'd look to do so. We have done a couple of tests already with electric vehicle tariffs, aiming people charging their cars overnight. That's a very sensible thing to do, which I think will really help with our climate and energy goals. So I know it's a sensitive topic, and I don't see it being as a way of penalising customers for consumption in busy periods, but certainly if it gives an opportunity to incentivise different consumption, then it's something actually we should grasp with both hands, and as that develops, we will do so. Alistair asks, what is our level of customer satisfaction and how are you trying to improve CSAT? So we measure customer satisfaction in a variety of ways. We do net promoter score testing, we do customer satisfaction testing. We find actually that Trustpilot overall is quite a good catch-all measure for our performance here, and our aspiration is to maintain the rating we've got at 4.5 and grow it from there. And as I said in the presentation, it has grown from there. That's obviously a difficult thing to do in an environment where nobody is exactly delighted by their energy bills, and I think the way you drive up satisfaction is quick response to communications. That's particularly coming electronically now. So more and more people want to email or potentially chat with their provider. So we're set up to turn those around. It is around the reforms that my team have championed for the last couple of years, installing Kraken, which is a system that enables a smaller number of customer service agents to see across the board from consumption through to account level, and therefore achieve a solution quickly for somebody rather than having to go from department to department to department. And I think there's a lot of evidence that we're doing that very well. And frankly, it is in the clarity and honesty with which we communicate with our customers about how we're navigating the energy crisis. And I would hope, whilst I'm sure the news has often been unwelcome, that we have explained very clearly what's going on. And that is will help us drive CSAT upwards further. Any further questions?
That's all the questions.
Live. Nigel, Rupert, that's great. And thank you very much indeed for taking the time to address all of those questions that came in from investors this morning. And of course, if there are any further questions submitted today, we'll make these available to you immediately after the presentation has ended. And ladies and gentlemen, we'll publish all those responses where it's appropriate to do so on the Investor Meet Company platform. Nigel, perhaps for redirecting those on the call to provide you with their feedback, which I know is particularly important to yourself and the company, if I could please just ask you for a few closing comments to wrap up with, that would be great.
Of course. So first off, thank you very much for your time this morning. I hope that gave those of you who are unable to attend the AGM a bit of an update of both how we're seeing the market and the strategy. It was deliberately very short, really, from that point of view. I think the closing remarks I would make is all shareholders should know that Rupert and I and the board and the team at Good Energy remain determined to run a fair and resilient business through an extraordinary period of turbulence in the energy market, but also to invest behind the ambition we have in terms of carbon reduction. And we are beginning to make traction on both fronts. And secondly, given that this is a presentation before an annual general meeting, it is important that shareholders have their say, and I would encourage your participation if you've not done so already. And as you saw, the board's recommendation certainly is that that you support all of those resolutions, which will help us greatly in running a smoothly run, sustainable and robustly run business, which I think we would all agree in the current environment is an important element of what we do. So that, I think, is it. So over to you.
Nigel, Rupert, that's great. And thank you very much indeed for taking the time to update attendees today. Could I please ask investors not to close this session, as you'll now be automatically redirected for the opportunity to provide your feedback in order that the management team can better understand your views and expectations. This will only take a few moments to complete, and I'm sure will be greatly valued by the company. On behalf of the management team of Good Energy Group PLC, we would like to thank you for attending today's presentation. That now concludes today's session. So good afternoon to you all.